give you that markets update now. Pressure being felt on world markets amid renewed negative sentiment over the global economic growth and persistent fears over a recession. This has also been evident in currency activity as the euro has struggled against the strengthening dollar, while the rand has also continued to slip. Well, let's check in now with the Chief Financial Officer at Makwe Fund Managers, Makwe Masilela, joining us for a quick overview of how things are shaping up at the JSE. Ndada Masilela, I'm reluctant to say that this has been a non-eventful week so far, given that inflation data we saw yesterday. How are things shaping up there?
Morning, definitely. There's been a non-event market because we go up today, tomorrow you go down. So it's just like a non-event. But today we managed to open up strongly, and we've been lifted mainly by our resources, and that's in line with our international peers. And the reason the resources are up is because commodities are up. And what has been driving commodities is because of the weakening US dollar. As we know that most commodities are priced in dollars. So as the dollar continues to weaken, that makes that affordable for holders of other currencies, and the dollar is weakening ahead of that Jackson Hole Symposium, where we'll be scrutinizing any indications that maybe the U.S. Federal Reserve might have to change their strategy, given that the economies are not looking okay, that we might tip into a recession.
So let's try and combine that global activity, Ndada Masilela, with the local economic data, which specifically talks to the CPI. What should we anticipate here?
Inflation is a global problem, and that is why we are talking about interest rates, because as inflation continues to go up, then unfortunately central banks will have to aggressively increase interest rates, and it's not going to just be a local issue. We've seen the past interest rate increase. It was a whopping 75 basis points, and that has been happening in the other parts of the world, and seemingly that is a new normal. But now, as soon as inflation gets to be tamed, then apparently central bankers are behind the curve, even though they don't want to admit that. Hence, they're trying to push so hard to tame the inflation. A worrying factor here is the guys seemingly are prepared to do everything it takes to tame the inflation, even though it might mean that the world economies, including the South African economy, might unfortunately go into a recession. So that as long as they manage to achieve their objective of trying to tame this high inflation.
Yeah, so yesterday the big talk was around consumer inflation. Today, what's expected is the producer price inflation data, which is also expected to be released by Stats SA. What is the market anticipating?
Currently, our PPI is sitting at 6.2%. That's more than double the CPI. We expect that it will continue to go up, and the main culprits will continue to be transport, and mainly petrol prices, as we've seen that they've been going up. And ordinarily, producers tend to pass that over to the retailers, and the retailers, they pass that over to us as consumers.
Let's talk company news. Let's specifically hone in on Harmony. They're warning of a profit hit. What does that mean exactly?
Basically, they're telling you that, guys, the past 6 months we have not been doing okay, and mainly because of higher costs and also the impairments that the guys had to incur. And higher costs, we have seen that as well affecting the lives of the DRD gold. And because we know of these high energy prices and labor prices as well going up, so that unfortunately is going to affect them. And even going forward, the guys will now be focusing mainly on their higher grade units and trying to also have a good mix when it comes to their production. But the cost rising continues to be a big issue, and the inflation story comes into play again, and we can see that affecting the company results.
Let's conclude with Rio Tinto upping the ante by increasing its offer to buy out Turquoise Hill Resources. Tell us more.
They don't have much of a choice. They just have to up that, Copper, nickel are seen as commodities, which you can call future commodities, because they see them being friendlier to the environment. So remember, Rio's offer, it was made at the time when copper prices were high. Even though copper prices have managed to go down, the guys are able to still increase their price. And we know that the likes of Rio Tinto, just like other mining companies, they're cash flush, and anyway, they know that they just have to diversify their portfolios. We've seen with the likes of BHP as well, saying they're going to start increasing their volumes when it comes to copper and nickel. So we know that's the way to go. And the likes of Billiton are also trying to acquire more copper mines. So it was expected.
Makwe Masilela, let me thank you very much for that markets update.